Hello, I'm Tobin Adams and welcome back to my channel. In addition to being a realtor, I'm a mortgage broker and I've been in the mortgage industry since 2016. In today's video, I'm going to teach you how to save $5,186.92 on your mortgage. Let's get started. First thing that I want to point out is that rates and the points, which are dollar amount that the borrower pays upfront in order to get that rate, they vary. They always vary. They have consistently varied historically. If you go back and look at data, there's always been a difference between the best rates, those in the middle, and those furthest from the best. And not just historically. I have a lot of first-hand experience with this. I'm a mortgage broker, and when a client of mine fills out an application with me, the first thing that I do is I go in and I pull rates from all of the lenders that I do business with. And every single time that I do this, there is always a difference of over $1,000 between the best rate and the one furthest from the best rate. I'm going to say that again, so I want to make sure that it sticks into you. Literally, every single time that I do this, there is always a difference of more than $1,000 between the best rate and the one furthest from the best rate. But yet, according to the Consumer Financial Protection Bureau, only 1 in 4 people that are going to go get a mortgage actually fills out an application with more than one lender. What are the other 3 people doing? Why are consumers leaving money on the table? That's the name of a study that Freddie Mac published in April of 2018. And that's what I'm here to talk about today. For this study, Freddie Mac hired data scientists, statisticians, and mortgage experts and looked at hundreds of thousands of mortgages across a 22-year time span and came to some pretty amazing conclusions. One of the first things the study mentions is the disparity of interest rates. Now, the time period they looked at was March 2018 when they did that, so rates are different than they are today. But the disparity, the difference, the distribution is still the same. At that time, as you can see on Exhibit 1, the average was about a 4.5% interest rate. And yes, I'm going to pause here because I know some of you are having a reaction to that. Okay, did you get it out of your system? Can we continue? Even though the average was about a 4.5, some of the rates were over 4.8, and others still were less than 4.3%. That's a difference of more than 1/2 of an interest rate at the exact same time, and that's the difference that I was talking about before. Then the article goes on to talk about what happens if consumers shopped around. In Exhibit 2, the blue line is the line that we were looking at before, which is just the rates that people got, the distribution, if they just had one loan estimate. Then the green dotted line is what happens if they go out and get 2 more loan estimates for a total of 3 loan estimates. Notice how it shifts to the left. The rates are going down. And then the orange dotted line is what happens if they got a total of 5 loan estimates from 5 different loan officers. Notice again how it shifts a little bit more to the left. And the one big takeaway that I noticed is that the maximum rate, when they got 5 different rates, obviously they're going to take the lowest rate that they got. Well, it topped off at about 4.65%, which is significantly less than the blue line, which almost makes it to 5%. So what does this mean? How do you interpret that? What that means is if you get multiple loan estimates, the biggest takeaway is that is protecting you from accidentally ending up with one of these high rates. The study had another exhibit, Exhibit 3, that takes that information and presents it in a table form, and it highlights what the average lowest rate consumers would get if they search for a total of 3 rates And then again if they search for a total of 5. The study doesn't mention anything after 5 searches, so I'm guessing it probably just levels off at 5 searches. And on average, by getting 3 loan estimates, the average consumer would lower their rate by 0.121%. And by getting 5 loan estimates, the average consumer would lower their rate by 0.166%. If you're enjoying the video so far, please hit the like button below. It'll help with YouTube's algorithm. Also, if you would like more content like this, please subscribe. On a weekly basis, I'm uploading new videos. Okay, let's get back to the topic of saving you money on your mortgage. Then the study converts those rates into present dollars, or the points that are equivalent to the difference in rates. On average, by getting just one more loan estimate, by just filling out one more application, the average consumer would save $1,435. Think about that from another perspective. Let's do a hypothetical. Let's say that I'm going to offer you a job. It's a contract job. It'll only last for 1 hour, but you can do it from your home. You can be sitting on your couch, in your pajamas, the cup of coffee in your hand. And when you finish this 1 hour job, I'm going to pay you more than $1,400. Would you take that job? Hell yeah, you're going to take it. Of course you are. Yet 3 out of 4 people, when they go to apply for a mortgage, they walk away from the opportunity. I mean, it's literally like there is like a money tree right in their path. And there's literally just money hanging from the tree. All they got to do is go and grab it. And yet they walk away. And that's just for getting one additional loan estimate. Now, if you take it to the extent of the recommendations from Freddie Mac and get a total of 5 loan estimates, you're going to save a lot more. It goes up to just under $3,000. But one thing I want to point out that this study came out in 2018, and back then the average loan amount was about $250,000. So today in 2024, with the average mortgage amount being approximately $445,000, if you take that same ratio from the study and apply it to today's average dollar amount, when you multiply it, you get $5,186.92. And that's how I came to that conclusion, how I got that number. And one other thing to add, if your mortgage that you get ends up being less than $445,000, then on average, yes, you're going to save a little bit less than that $5,000. And vice versa, if your mortgage is going to be more than $445,000, then on average, you're going to save even more money. And there is one thing that the study doesn't mention, and I think it's very common in these kind of, what would you say, like data-centered, data-focused research projects. It has to do with the emotional side of it. So what happens if the first application you fill out, the first loan estimate that you get, turns out being the best, and the other 4 that you do, they're not as good? Well, in that scenario, you're going to have peace of mind, because you know that you have checked and gotten other loan estimates, so that you know that the loan that you're going forward with is a great loan that you get. So you're going to have peace of mind when you go to bed at night after you've decided to lock on that mortgage. When you move into your home, you're going to have that calmness, that like, okay, I'm happy with the mortgage that I've got. You're not going to have any regrets because you checked. So either you're going to get that peace of mind, or you're going to save money, or both. So my advice to you is, when it comes time to get multiple loan estimates, take the day off of work. Use a personal day, use a vacation day, and let your work for that day be filling out applications so that you get multiple loan estimates. The data shows that if you do this, on average, you're going to save thousands of dollars. And as I mentioned before, the Consumer Financial Protection Bureau says that on average, 3 out of 4 people don't do this. I think it's because they've got emotional fatigue. They've gone through this whole process of getting a real estate agent, filling out an application, going shopping for homes, and they're just emotionally fatigued, and they just go with the loan estimate that they got from that loan officer that they were dealing at the beginning when they were getting pre-approved. Don't be one of those 3. Fill out multiple applications. Take the time to do this. You're going to save thousands of dollars. Thank you for watching this video. I hope it's been helpful for you. As I mentioned before, my name is Tobin Adams. I'm a realtor. I'm based here in Austin, Texas. So if you're looking to buy or sell your home, please text or email me. My contact information is in the description below. Also, I am a mortgage broker. I'm licensed in Texas and in Florida. So if you're looking to refinance your mortgage or to buy a new home elsewhere in Texas or in Florida, please reach out to me. I love my job. I love helping people navigate the home buying journey. Once again, thanks for watching. Have a great day.